You're probably leaving thousands of dollars on the table every single year, and you don't even know it. The wealthy aren't necessarily smarter than you. They just understand something fundamental about how money and taxes work that most people never learn. Here's the thing. Understanding the money habits of wealthy people isn't about becoming rich overnight. It's about learning the legal strategies that let successful people keep more of what they earn. And I'm going to show you exactly how this works in the next 6 minutes. Before we dive in, let's be crystal clear on something. Tax avoidance and tax evasion are not the same thing. Tax evasion is illegal. That's hiding income, lying on your return. That's fraud. Tax avoidance, on the other hand, is completely legal. It's using the rules that already exist in the tax code to reduce what you owe. The IRS literally builds in these deductions and strategies on purpose. Think of it like this. Tax evasion is cheating. Tax avoidance is playing by the rules smarter than most people. The wealthy understand this distinction and act accordingly. Okay, so here's where the real wealth building starts for most people. The wealthy prioritize maxing out retirement accounts before they do almost anything else with their money. In 2024, you can contribute up to $23,500 to a 401k if you're under 50. That's twice that reduces your taxable income dollar for dollar. That's not a tip. That's a tax deduction built into the system. Then there's the Roth IRA. You contribute after-tax dollars, but everything grows tax-free forever. The wealthy use both of these accounts strategically. They're not choosing between them. They're maximizing contribution limits across multiple account types because that's how you build wealth sustainably. Now, if you're self-employed or own a business, this is where the strategy gets really powerful. Business owners can deduct almost everything related to running their business: office supplies, equipment, a portion of your home office, vehicle expenses, continuing education. One of the biggest moves wealthy entrepreneurs make is structuring their business as an LLC or S-Corp instead of a sole proprietorship. Why? Because that structure can save you tens of thousands in self-employment taxes annually. A simple sole proprietor pays 15.3% self-employment tax on all profit. Structure it correctly, and you can reduce that significantly. This is why you see successful people talking about their business structure. It's not just complexity for complexity's sake. It's literally thousands of dollars in tax savings every year. Here's something most beginners miss about investing. The wealthy don't just invest. They invest strategically for tax efficiency. When you hold stocks long-term, you pay capital gains tax instead of income tax. Long-term capital gains rates are 0%, 15%, or 20%, depending on your income. Way lower than ordinary income tax rates that can hit 30%. So wealthy investors hold investments longer specifically to qualify for lower tax rates. They also use something called tax loss harvesting. If one investment loses money, they sell it to offset gains from winning investments, reducing their tax bill. These aren't tricks. They're legitimate strategies built into the tax code. Most people never even hear about them because they're not taught in school. Let me give you the practical takeaway here. You don't need to be wealthy to start using these strategies. If you're earning income, you should be maximizing retirement accounts. If you have any business activity, even a side hustle, you should understand how deductions work for you. If you're investing, you should know the difference between short-term and long-term capital gains. These aren't secrets. They're fundamentals of personal finance that the wealthy simply take seriously from day one. The money habits that build wealth are built on understanding these basics and executing them consistently. Start with one thing. Figure out if you can increase your retirement contribution this month. That single action puts you on the same path the wealthy use to build generational wealth.